Hello, everyone. Thank you for joining me today. My name's Gerdo. This is the Gerda Lives YouTube. Today, I wanted to make a quick little video going over Total 3. I recently made a post about Total 3 and how you can cut out just about 99% of the noise and nuance just by focusing on it. Total 3 is a chart that maps altcoin market cap and removes Bitcoin and Ethereum from that equation. I frequently reference it whenever I make charts or I check the status of the crypto markets. It's a really easy, intuitive thing to follow if you're tracking where we are in the cycle. In respect to, I often use it to converse that with the global liquidity cycle and M2, as well as Bitcoin and other altcoins. Um, like I said in the recent tweet I made a couple days back on the 21st, I wanted to touch base and expand on this a little bit more because I think it's really relevant with where we are in the cycle currently in cryptocurrency. I think we're near the local bottom. There was a bottom last year that was like the pico, like the absolute bottom that you could have bought alts and crypto. But this is like, in my opinion, the next best bottom that you could get this month, maybe next month. And then after that, you're not probably not going to see these prices ever again. Maybe the next bear market, maybe not. We'll have to see how that goes, TBD. Um, but anyways, just continuing with this post, the logic is you want to hold good, solid, undervalued alts in this environment. Key narratives for the coming months. I like AI. I like gaming. There's a couple other ones, RWA. Some people like memes. I just don't really specialize in it as much as the others. But you could probably make quite a lot with many different narratives. I just think that AI and gaming are like, in my opinion, almost as close as you can get to a sure bet in the altcoin game, as far as narratives are concerned for the coming months. So that's my comfort zone. It's what I specialize in. So that's what I'll be talking about here. Um, Point number two is take profit when it's available. That's pretty obvious, common sense there. If you make a lot of money, if you don't take profit, the market's going to take it from you. This is coming from someone who's been in crypto for many cycles now and many years. So if you've made quite a bit, don't be afraid to take a profit because when the bear markets come, they're brutal. And then, of course, the goal is to retire, take care of yourself, take care of your family. And then there's no other market like this. It's the greatest opportunity. Many of ours generations in our lives, I don't think we'll ever see an opportunity like this again. A lot of people may disagree, but you might have maybe 5, 10 years left in the crypto market where you can pretty much uh, throw darts on a board, pick some top alts, pick Bitcoin, pick Ethereum, and outperform just about everyone's retirement portfolio. And you're going to sleep well at night. So that's the market that we like to hang around in. Okay, so we're going to flip over to the chart. So this is total three. Again, if you wanted to look this up on TradingView, it's crypto total market cap excluding BTC and ETH. I like to look it on the 1 week, and this is total three if you search for it, and it'll pop up. I like to call this the altcoin map or treasure map, if you will, through the remainder of this decade. And as you can see in the past, it's been a pretty reliable indicator of the tops and the bottoms of where altcoins will go in the respective cycles. What I do, the very first point I like to mention is I like to put it's called an LGC, logarithmic growth curve, on both the top and the bottom channel. And what that does, especially important for altcoins, but also it also is works for Bitcoin as well. It's accounting for diminishing returns over time, and basically that's just saying, if we go from 10 billion to 20 billion, okay, that's fine. But once you get to 20 to 40 to 80 to 160, especially once you get to like, let's say the 2017 cycle and the last big 4 year cycle that we had that topped out the end of 2021, um, we're talking about going from right around 280 to 300 billion to 1 trillion. Okay, that's 700 billion. Okay, if you want to do that again, it's possible. But in my opinion, every peak, every cycle, you're gonna see a little bit less gain in terms of multiple, but with that, you're gonna see more stability and less volatility. So it's still outsized gains, it's still outside reward, but it's just the natural evolution and maturity of this market. We're going from trillions in the total market cap to multiple trillions, and trillions is a big number. So it's just going to take a lot more capital to push the numbers higher. So going continuing with this total three chart, and I can make this public as well on my trading view. I can link that in the description. I've just kind of drawn out some high levels here. The current peak of the last cycle was 4x the previous. So we go from maybe 250 to 300 to 1.1 trillion to 1.1 trillion for about a 4x the previous peak. Okay, we come back, we retest that prior level, and we're right here, right around the midpoint. I believe that we're not going to see a 4x from the prior peak. We're going to see something that is maybe around a 2, maybe higher, but if you want to be conservative, maybe we only see 1.8x, so a little bit less than half the prior multiple. That would take us to somewhere around 2 trillion. Maybe on the low end 1.6, 1.8, maybe in the high end it could go up to 2.5. It's just, again, TBD, but this is just a general high level thing that I like to do, is put a diminishing return curve on whatever I'm looking at, because those numbers are not going to continue to multiply ad infinitum. They're going to slow down over time. It's just the law of large numbers. So again, here we are currently consolidating before what I think the end of this year we'll see a full send going much higher, and that's when you're going to want to start looking at levels, preferably now. Where are you going to want to sell, and just mark those levels out, because when these big numbers come, people will be consumed by greed and their biases. They'll be justifying all kinds of reasons why the market will continue ever higher, and it never does. It always peaks out. We always have a very volatile period. We'll have a bear market. I believe this next bear market will come sometime the end of next year, maybe sometime middle of 2026. And just like the prior pattern, just like the prior bear market, it's probably going to go down to test that prior peak. Go lower, could be a little bit higher, but again, I'm just mapping out the pattern. It's the best we can do. We don't know what the future is going to do, but we can have a good general idea that can help us guide us through, and that's what this chart is all about. And it's about a 3.9 year liquidity cycle. It coincides with the 4-year Bitcoin cycle. In my opinion, it's just coincidental, but I think Bitcoin, and specifically altcoins as well, especially altcoins, they map more the liquidity in the system versus just the halving event itself in the Bitcoin life cycle. And you're just going to continue to see that more and more as we go along, as the effect of the Bitcoin halving has less of an impact versus these large liquidity events that go through all the markets, and they show themselves in crypto due to its volatility. That money has to go somewhere. So that's my prevailing thesis on that. Um, and again, so the liquidity cycle, if we map this out, I believe it'll end sometime by the end of next year, late 2025. It could go into 2026, but at some point you're going to see a bear market, likely in 2026. And as well, when you look at these cycles, you have to really like put another layer in on top of these bull bear narratives in terms of seasonality. Q4 through Q1 is typically the most bullish period for crypto to outperform. If you average these out over time, the summer periods are very slow. You might not see any gains. It might only just be Q4, Q1, and you'll see outsized gains, right? And there's a variety of reasons and factors why this happens and occurs, but it does. And this is a topic for another video that I can get into. But if you go back in prior cycles, it's very blatantly clear. It doesn't mean it has to repeat, but it often will rhyme. So that's what just gives us a kind of like a general idea of what we can look for. It could mean that crypto peaks out in Q1, Q2 of next year, has a dip, and then has another top in Q4 of next year. But it doesn't have to play out that way either. It's just something that we'll have to reassess as we go along. Another thing that I like to look for is the just like the macro side. What's the economy doing? What's the S&P doing? Again, I can address these in future videos, but I still believe that a recession is on track for sometime later next year, possibly 2026. We saw the yield curve uninversion event happen recently, and the 10-year and the 2-year. That's the most reliable predictor of an oncoming recession. I don't think this time is different. I think we're on the verge of another event. It's just a matter of when that will happen. That recession will have to eat through about 3% positive GDP, as well as still relatively low unemployment figures. So these are some factors to keep in mind as we go along. Um, and corroborating what I feel is a coming recession is also the rise in gold. That's kind of like a fear trade. It's also a trade that people take that, they see the oncoming inflation, and they just want to hedge to that, which it's an interesting dynamic between gold and Bitcoin because we can argue that gold leads and Bitcoin trails by a few months. We'll see if that continues. I think there's cases to be made on both sides. The narrative that gold and Bitcoin are both hedges towards debasement, um, but they're definitely different risk assets, right? So gold is tried and true. Bitcoin's maybe like the new kid on the block. Um, it's a little bit more volatile. Central banks are still a little bit more hesitant to accumulate it versus something like gold. But it'll be interesting how that continues to play out over time. Um, and then just going along with this chart of total three, after we get through this coming bear market, which we're looking a little bit further ahead, this becomes a little bit more vague and not it's not a certainty. We're just laying out some guesses here. But if we did retest that 1 trillion level in the bear market, we could potentially go as high as 3 trillion or higher in the bull market that follows that one before the end of the decade, right? So these are opportunities for you to compound your gains, or you could hold through it. But as many people realize in the crypto game, that you don't want to hold alts through a bear market. You do get slaughtered. Um, it's not fun. You can hold some Bitcoin, but even that, you might want to take some profit. So that's why this chart of altcoins becomes very critical. That you lay some very common sense, grounded predictions on where it may go, where it may top out, and accounting for diminishing returns, so you can capitalize on that and hopefully compound your gains over time, and then of course retire young. Um, so this is my first, or actually my second video on this channel. I hope you subscribe and like this video, and I will continue to make more like them in the future. And I appreciate you watching. Thank you. Bye bye.